If you're trying to find a profitable trading strategy, but you have work, school, or other commitments that you can't sit in front of the markets all day to watch the charts, in this video, I'm going to explain my 1-minute scalping strategy that allows me to only trade for the first 2 hours of the day and then enjoy the rest of the day. Because at the end of the day, the reason you want to be a full-time trader is not to sit in front of the charts all day, but rather you trade for freedom of time and being able to do whatever you want, whenever you want. So with that being said, let's get into the video. So what is the strategy? The strategy involves a 5-minute opening candle. As we know, the 5-minute opening candle gives us a lot of information on the 1 minute, and the 1 minute is where we're going to scalp from. Now, here we can see the 5-minute opening candle, but if you actually zoom into the 5-minute opening candle on the 1 minute, what do we see here? Well, we simply see range. So this 5-minute candle, though it's bullish, on the 1 minute time frame, we can see that there was multiple candles making up this 5-minute opening candle. Because of this, what we want to do is draw out the high and low of the first 5-minute candle. And based off of this, we have 4 different scenarios that we could enter the stock from. This allows us to not go into the day with a bias, but simply understand how to enter the trade based off of the intraday price action and just have quick scalps to be done the day within the first 2 hours. Now, the 4 scenarios we have within the 5-minute opening range is simple. For the 2 bullish scenarios we see here, it is simply moving down to the 5-minute low and then holding that level for a move potentially to the upside. And then number 2 for the bullish side is a move above the 5-minute opening high and then retesting that high because that's the lowest risk entry for a move to high of day and continuation. Vice versa, for the bear side, we have the retest of that high of day or 5-minute high for a move to the downside, or a break below the 5-minute low and then a retest for a move, of course, to the downside. So every single day, there's 4 scenarios that could potentially play out. Therefore, if you're someone that needs to take a trade a day, we talked about trade frequency in my last video. If you haven't watched it, it's such an important video. However, if you guys understand trade frequency, if you're someone that wants to trade daily, this strategy may be for you. I have other strategy videos on my channel, of course. However, this strategy is probably something that you can use more often than the other ones, just because every day you will get the 5-minute high and low. And most likely if the stock isn't consolidating, you will get a break to either side that you can play one of these potential 4 scenarios out. Now, when we keep moving here, this is simply what we're looking for. As you can see here, we had the break on the 5-minute, see an impulsive candle, strong displacement, a retest with a strong price action candle. Our stop loss is a close right below that 1-minute candle, and our profit target here will simply be high of day, which is a 2.52 risk to reward trade. Now, a couple things you have to understand about this strategy. Number 1, the average risk to reward we're looking for is simply a 2R multiple if you're scalping on the 1-minute chart. However, for some people, they want to go on the higher time frame, and that's completely fine as well. If you want to trade this on the 2-minute, the 5-minute, even the 10-minute, all you have to do is just go higher in time frames. For example, if you want to trade the 2-minute opening range, you may want to mark out the first 10-minute candle and then look for the retest of that. However, for me, what works the best for scalping is the 1-minute time frame, because the most precision and the highest reward is going to be on the 1-minute time frame if you can master volatility. Now, with this being said, as long as you understand price action, which I have a full in-depth guide explaining how to read price action in candlesticks, as long as you understand that concept, this strategy is extremely effective. Now, in this video, what I'm going to do is backtest this exact strategy that I just explained to you guys over a 1-week period on SPY. And based off that 1-week continuous backtesting, all we're going to do is look for 1 trade a day. We're going to trade from 9:30 a.m. Eastern time to 11 a.m. Eastern time. And the purpose of this video is to give you multiple examples so you can come back to this video at any time in the future and re-watch the examples to see exactly how I enter the trade compared to how you may have entered your trade, and also to give you realistic results over a 1-week time frame. I'm going to do it continuously, and therefore you're going to be able to see the results over a 1-week period rather than me going and looking at hindsight or cherry-picked examples. So with that being said, let's get into the example. All right, so here we can see we are opening up on Thursday on SPY, and I'm going to do this over a 1-week period. Therefore, I'm going to do it till Wednesday. Now, of course, for backtesting results, this isn't enough data, so I recommend you go and backtest this yourself as well. But I just want to show you over a 1-week period if this strategy is going to be profitable or not. So the first thing we have to do on the first 5-minute candle here is simply mark out the high and the low of the first 5-minute candle. Now we go to the 1 minute time frame, and on the 1 minute time frame, you can see, of course, we have a little bit more data here. We can see this candle came up strong. We had an impulsive move to the upside. We then rejected this high, and now we're coming back down. So of course, the 1 minute gives you a little bit more data that you weren't able to see on that 5-minute candle. And now what we're simply waiting for is what we talked about earlier. Number one is either a hold of this level and a push to the upside. Number two is either a break of the upside and a retest for a move once again to the upside, or we're looking for a break and retest of the downside, or a rejection of that 5-minute high for a move to the downside. So those are the 4 scenarios that we're looking at for this specific trade. Now let's play out the trade and see exactly what happens. So one thing I want you guys to notice here as well is as we moved up here, we broke the level, but then we came back and we consolidated. So this break right here doesn't show enough displacement. What displacement means is it's simply the move from the key break of the level all the way down before we get the retest back into our zone. And we need displacement to, of course, enter the trade. With this level here, we can see we broke, and then this candle pushed right back up above our level. Therefore, this level so far has been invalidated for a move to the downside. This is where understanding price action is key, but so far we have not entered into this trade because we haven't gotten any bullish or bearish signals near our key levels. As we can see here, we're simply just consolidating so far. We haven't created a clear trend, and the reason I can't take this for a potential move to the upside is because we have actually broken that level and then moved back up. And therefore, so far, this is simply a choppy day. And now what I would be waiting for, the only way I would play this day is if we broke the 524.21 level for a retest, or if we broke the 525 level up here for the retest. Here, now we see this displacement. What we see here is displacement. What this refers to is an impulsive move after the breakout. This means that now sellers are in control, and therefore we are now looking for a retest of this previous 5-minute low. So let's keep playing out this trade. And as we can see right here, what we're getting is that rejection of the trade. We can see we pushed back up into that 5-minute opening range, and we're getting a bearish inverted hammer candle. We also see that the green candle was not able to close above the 5-minute low, and therefore we can enter into this trade here. Now, we would enter into a short position, and this trade is fairly simple. Our stop loss can simply be a break of this green candle right here, because once again, if we go back into this 5-minute opening range, this means most likely we're going to consolidate how we did back here, and our profit target here can simply be low of day. Now, this is a 3.79 R multiple trade. We enter into a short position here, and let's see exactly what happens. And we made a very nice move to the downside. Now, this was a $325 day on Thursday. I'm going to backtest until Wednesday. And at the end of the video, I'll show you the results for the full week, the total P&L, the amount we risked, and the amount we actually profited. So make sure to stick to the end. But with this being said, let's go over to the next day on Friday. All right, here we are on Friday. I marked out the opening high and the opening low for the first 5-minute candle. And now all we're waiting for is the 4 potential scenarios to set up. So let's play out this trade. And as we can see, we got a very strong move to the upside right into the beginning of the day. Now, what we're waiting for is the retest. The retest opportunity is down here, and then a push to the upside. So let's see if we can get that potential move. Now, here's a scenario where the trade does not occur. The reason this is because when we push back in here, this candle right here had no strong price action. If this candle closed like the candle down here, then of course we would be able to enter, because this candle shows that sellers made the stock go all the way down, but buyers brought it all the way back up and closed it with this strong hammer candle. Unfortunately, with this candle, we can see that buyers did try to bring it up, but then sellers came all the way at the top and closed it below our specific key level. And because of this, we can't enter into this trade based off of the weak price action, and we still need to wait for a potential trade to set up. So you can see with this strategy, you only enter A+ trades, and it allows you to not enter into these subpar trades because of the price action that's presented near these key levels. So let's keep playing out this trade. So we had the move initially, and now we have the displacement. So now after we did break to the upside, but most buyers got faked out to the downside, if we do retest this low with a weak price action candle, this would be a perfect entry for a short position. So let's play out this trade. And as we can see here, we came up and we actually retested this level right here. And then we put in a weak price action candle. So how would I enter into this trade specifically? Well, I would be looking for a short position here. And my stop loss in this specific trade would be this impulsive candle that tried to break this level. Therefore, my stop loss would be up here. And for my profit target, because low of day is so close, we would have to look at previous day levels or even psychological numbers. Now, in this example here, we can see that the previous day low actually occurs right here at 521.34. This is the previous day low, and therefore this can be used as a profit target for this specific trade. So if we were to enter into this trade here, our profit target would be all the way down here, with our stop loss, of course, being at the close of this impulsive candle high, because once again, if we come back into that level, we could potentially just have range or move to the upside. So this is a 3.49R trade. Once again, we enter into a short position, and let's play out this trade. This was a solid trade all the way down to those lows, and this was a $1,090 trade. So this was Friday. In this example, we were able to see how we only enter A+ trades. Now let's go over to Monday to continue our week. Here we are on Monday. I marked out the high and low of the first 5-minute opening range. Now let's play out this trade and see exactly what happens. So as we can see, in the beginning of the day, we were just consolidating in between 529.16s and 528.61s. Now we can see a strong move to the downside with a strong displacement. So all we're simply looking for is the retest of this displacement and then the rejection of that low. So let's play out this trade and see if we can get that retest. Now, here's an interesting scenario. Now, this was a 10 o'clock news pop. However, after the news pop, we can see that the news had the rejection of 529.16s, and then we continue to reject on the next candle with a very weak candle. So how would I potentially play this trade out? I would look to enter into a short position here. My stop loss would simply be a break above this 1001 candle. And the reason being for that is because once again, we come right back into range if we do break back into that 528.61 level. And of course, as we talked about earlier, we need at least a 2R multiple. Now, within that 2R multiple, what I can see is this 526 level. Based off of this 526 level right here, this would give us around a 2.04R trade. And therefore, because I trade at least a 2R multiple, that's my average risk to reward, I can enter into this trade. So let's enter into a short position here. Now, some people are going to ask why 526. This is a whole psychological number. If you haven't watched my other videos, it's very crucial that you go watch those as well, just to understand more things about price action, market structure, and exactly how I'm entering and exiting this trade. But you just need to understand that this is a whole psychological number, and this is where institutions mainly buy or sell at, because it is a whole number. Now, let's play out this trade. So far, as we can see, we are simply just consolidating. And there we go. There's that 526 level. We can see that was $950 on the day with a 2.04R trade. So that's Monday. So far, we've done 3 days. We have 2 more days left. So let's go over to Tuesday. Once again, now we're on Tuesday. I marked out the first 5-minute opening high and low. Let's play out this trade. And as we can see here, this is a different trade than we've taken so far. However, what we're getting here is a rejection into the open, a move down, and then a rejection once again off 526.77, which is the high of the 5-minute. So we can look for a potential short position because this is such a weak and bearish candle, looking for a move down to 525.77. And our stop loss in this case scenario would simply just be above high of day. In this scenario here, we can just put it at 526.90. So this would be a 3.52 risk to reward trade. Let's enter into a short position here and see exactly what happens. Unfortunately, as we were making that move down, right, we did have an impulsive candle to the upside. And because of this, we did hit our stop loss here. And because we wait for the candle to close, the candle closed right here. And this was a minus $235 trade. Now, of course, with every strategy, this is why I'm doing it over the 1 week period. This isn't cherry picked or hindsight examples, but what I want to show you guys is that every strategy, right, you will lose because this isn't textbook and I'm showing you in the real markets what happened literally last week. You see that I lost the $235, but because of the proper risk management, it wasn't that big of a loss because every trade is over a 2R multiple. And therefore what that means is even if we lose one trade or two trades, on the third trade, if we win that, we will still be profitable or break even. And therefore this $235 loss is completely fine on the Tuesday. Now let's go over to Wednesday, which is the final day of the week, and then we'll do the final total profits for the whole week. Here we are on Wednesday. This is the last day of the week for us because we started on Thursday. Therefore, this was 1 week of back testing. This is once again 5-minute candles. We're looking for those 4 potential scenarios to play out for this week. So let's play out this trade. As we can see, we're currently breaking that 530.12 level. We're going to be looking for the retest. Now, this retest here, we see that it came back up and we actually are pushing above the retest level. Therefore, there's no weak price action just yet for us to enter in on. Now we can see that we did break again to the downside, this time a stronger displacement, making a new low of day, showing low of day continuation. And therefore now we are looking for, once again, that retest of 530.12s. Hopefully this time we can get a little bit better price action. Now in this scenario here, we can see that we're retesting with a weak price action candle. We came back up and we are printing a weak candle that is closing as a red candle with a clear top right here. So we can enter into a short position like we talked about before. Our stop loss in this scenario would just simply have to be above this previous pivot level right here. And for our profit target, if we simply do low of day, that's only a 1.69R multiple. Like I talked about, we need at least a 2R multiple so we can actually scroll back out on the day. And as we can see, this previous day high level is what we can target because that's a pivot level on the daily time frame, which holds a lot of emphasis on the chart. We can have this as our profit target, which would give us once again a 2.93R multiple trade. We can enter into a short position here and let's see exactly how this trade plays out. Now this candle right here was a news candle at 10 o'clock, and because of how fast it happened, most likely you weren't going to be able to get out of your trade, and therefore I want to make this realistic. Therefore we're not going to count this as a profit target because it did happen so fast that realistically you weren't going to be able to get out of that position that fast. However, as we can see, even with that news candle, we did make a move down. Now we can obviously exit out of the trade. And this was a $490 trade to end off the week. Now let's go over and see the results of the week, the total profit, the amount we risked, and the risk to reward multiple that we had per trade. Okay, now we're here for the results of the total week. There was only 5 trading days for the week, of course, and therefore we took 1 trade a day. I hope you guys noticed that with this strategy, it's more about quality of trades than quantity. For myself, I like to only take 1 to 2 quality A+ trades per day. I don't like to push the limit over that. And recently, I've only been taking 1 trade per day, and it's been working out extremely well. And here we can see we took 5 trades, 4 of them won, which was an 80% win rate. Now, with this win rate, we have to look at the results. So when we look at the results, these are the 5 trades that we took. We can see the R multiple, so 3.79, 3.49, 2.04, 3.52, and 2.93. What this means is for every dollar that we risked, we would have made $379 for that trade. So if we risk $1, that dollar would have turned into $379. Now, as you can see, for most of these, it's much over that 2R multiple. And if you average all of these out, it would come out to around a 3R multiple for this specific week. But in my personal opinion, as long as your R multiple is over 2, that's still completely fine with this strategy. As we can see, on the first day, we made $325. Then we made $1,090, $950 on the third day. We lost $235 on trade 4, and we won $490 on trade 5. One thing I want you to notice as well, notice the loss compared to all of the wins. The loss is so much smaller because our R multiple is so high. Therefore, for you as a new trader, or if you've been trading for a little while, just understand your risk management and the way you use your R multiple will take you much further than trying to get the best win rate. And this is why, in my opinion, risk management and your R multiple is key to your trading success. Now, when we look at the results for the 5 days that we backtested, because there's 5 trading days in a week, we made $2,620 for the week. Now, of course, like I said, this is just a 1 week backtest. It's just show you a little bit more realistic results and examples so you can come back to this video and rewatch it. However, I always recommend try to backtest the strategies yourself to increase your confidence and conviction to actually enter and use this setup. So with that being said, if this video helped you, make sure to give it a like. If you have any questions, put it in the comments down below. Make sure to follow me on Instagram and Twitter, and I'll see you guys next week with a brand new video.